Hello, everybody, and welcome back. Today, my guest is Shaniel Ramjee. Shaniel is a senior investment manager, emerging markets, multi-assets at Pictet Asset Management. Warm welcome, Shaniel.
Thank you for having me.
So, Shaniel, today we want to discuss frontier market developments in financial markets. So, what is your definition of a frontier market? How do frontier markets differ from emerging markets, and what is included in this investment universe?
Well, it's a good question, and it's one that is quite fluid because the definition about frontier markets is really about their accessibility, how open they are over time, their capital controls, and whether investors can actually invest in them. We see a lot of change between what's a frontier market, what's an emerging market, and countries usually move between one and the other over time. So, for example, Qatar or the United Arab Emirates have graduated from frontier markets into the emerging markets, whereas we see some emerging markets have become less investable and moved into the frontier market space. So what we see is a bigger, diverse set of countries relative to emerging markets. In emerging markets, we have quite a concentration in China, South Korea, and Taiwan, these type of big economies, where in the frontier markets, we have much more diverse economies, smaller economies, but rather dynamic ones, and ones that we find very interesting. These are areas that are under-researched. Not much is known about them in a very highly covered way by the financial community. So in a way, we think this provides such a really rich environment to find really great investments.
Hi there. Just a 2-second break. Before we continue with the video, just make sure to subscribe to our channel now to not miss out any updates. Thank you very much and enjoy the video now.
Frontier markets are generally characterized by rather small, illiquid financial markets. So many companies are not listed on stock exchanges there. How investable are frontier markets nowadays?
Well, actually, they are progressing at quite a good rate. By many metrics, they're progressing at double the rate as the emerging markets were developing. So in a way, we look to these frontier markets as becoming much more investable, much more quickly than the emerging market counterparts. Now, yes, they are more illiquid. So we need to think about the spreads. We need to think about how easy it is to buy these securities. But in a way that provides a lot of the return. We think that this is not a market that you buy in and sell out of very quickly. You have to take a longer term view, but that's part and parcel of really believing in the development of these economies. A lot of these economies have very good demographics. Their technological change is advancing very quickly in the sense that they're able to leapfrog technologies very quickly. So, for example, mobile technologies today are being adopted much quicker in some of these frontier markets than landline technologies that we were used to for so many years. So in a sense, they are progressing from a technological aspect much quicker. That gives them a real advantage in terms of building up their economy into one that is much more digital, much more modern than one might think.
Let's have a closer look into some of those countries. So which frontier markets do you take a closer look at? In which countries and sectors do you see investment opportunities? And also, do you prefer to invest in equities or bonds in frontier markets?
That's a really interesting question. And because of your point about the liquidity of some of these markets, we think it's important to take a multi-asset approach. Some economies don't have the stocks listed on the stock exchange that really benefit from the economic growth. So how do we benefit from that ourselves as global investors? We might want to invest in the country's bonds, for example, because as that country progresses, as it develops, the country's bonds become much more creditworthy, and we will get better returns as investors. So we think having both an equity and bond hat on when thinking about frontier markets is incredibly important. In terms of which countries are interesting to us, well, part of the change in the global supply chain network has meant that China has really lost out to some of these frontier countries. Vietnam, for example, many global internationals are now producing a lot of their goods in areas like Vietnam or Bangladesh. Both of these countries sit in the frontier economy network. And we think that these are countries that are really going to benefit from supply chains moving around. We know that commodities have been rising, and a lot of these frontier countries have really large endowments in commodities. So, for example, if we think about oil, some of the GCC countries or the countries in the Middle East, such as Qatar, benefit quite substantially from higher oil prices. At the moment, we even think areas like Angola, which has large oil deposits, will benefit from higher oil prices. So, for example, we like Angolan bonds today. We think they will have a really interesting path forward as higher oil prices stay around. Now, obviously, we have risks in frontier markets, and we have to consider those. And for example, what we see in areas like Sri Lanka is quite important to notice. And in a country like Sri Lanka, where they don't have such strong natural resources, they lack dollars in an environment of a tighter liquidity situation that we have today. So we know that Sri Lanka is having a really tough time in terms of managing its economy at the moment. Its currency is depreciating, and the economy is really failing. So in a frontier markets, it's really about trying to understand which economies are benefiting and which are under pressure. So active management is really important.
The economic development of some emerging markets has taken decades. So what time horizon should investors expect for frontier market investments?
Typically, we would say that investors need to take a longer term view. These are economies that are trying to improve over time, that are still in development, and they will suffer in some instances because their institutions aren't as sophisticated or built up as we would expect in the West. So we must believe that these economies will, over time, develop much more rigorous institutional frameworks. But the trend is there that these economies have really good demographics, and demographics is so important in global economy. Their inflation rates are high, but now not so much higher than what we see in the West. So the differential is much closer than it has been. So that becomes an advantage. And of course, the growth rate of these economies are much higher than what we see in the West. So while we think that the investor needs to take a longer time frame, we do believe over time they will be compensated.
COVID-19 has had a devastating social and economic impact in countries with weak health systems, especially. What are the long-term implications of the pandemic for frontier market countries?
The pandemic has been quite severe in many of these countries, purely because the vaccine availability was so poor at the beginning. The WHO measures almost 120 million people that were pushed into really severe extreme poverty through this period of time where economies were effectively locked down. And on top of that, the remedy in terms of government supporting the economy has meant that debt levels have also risen. So a lot of these economies have suffered. Now, what we hope to see is better vaccine or medical availability, and that's starting to happen with the Western world being able to supply more help to these economies. There's been some debt relief that has come through, but also importantly, these economies with their younger demographics have been able to rebound much faster. So as those economies have opened, those younger demographics have really played to the strength of a lot of these economies and meant that these economies are now again producing very strong growth rates. So again, back to demographics, the younger population in these countries really help.
A rising US dollar and US interest rates are detrimental to emerging markets. To what extent are frontier markets affected by the current financial market turbulences?
They're definitely affected. As I mentioned, the high US interest rates mean that dollar liquidity, especially abroad, has been scarce. And countries like Sri Lanka have really hurt. Even countries like Ghana have had their currency depreciate very sharply because the inflation rate has risen quite meaningfully there, and the access to dollars again has been sparse. So it's important to know which countries are vulnerable. So what we want to make sure is that we understand which countries can find a path to better dollar liquidity. Now, for example, a country like Ghana or even Egypt has access to the IMF. And that access to the IMF gives them a path to have better debt sustainability, better lines of credit. And we see a path back from really severe difficulty for countries like Ghana. Now, this is not the case in Sri Lanka, which they've not wanted to participate in IMF programs as easily as Ghana has. So we see a worse situation for a country like Ghana versus a country like Sri Lanka versus a country like Ghana. But ultimately, what we want to see is these countries raising interest rates. And what they've done is they've been very proactive. They've been much more proactive, in fact, than our Western governments and our Western monetary policy authorities in terms of raising rates quickly. And that has helped keep emerging markets a bit more sustainable from an interest rate standpoint because they were acting quite early.
ESG factors are playing an increasingly important role in investment decisions. So how should frontier markets be viewed in terms of sustainability?
It's a much more difficult question for these economies because they're so early in their development, or rather their development makes a huge difference to those populations. So if we say, for example, we want to limit oil and gas investments, for many of these countries, oil and gas investments are one of the primary sources of societal income. So do we weigh the S less than the E? This is a typical question that we have when we invest in these countries. So it's all about incremental change. It's all about how these countries are trying to be mindful about their development, how they're using new technologies, and how they're trying to balance that economic growth from just being focused on one industry, let's say oil and gas, or trying to diversify their economy. All of these elements come into play when we start to think about sustainability, because if we want the country to be a sustainable, safe, productive economy, we need to think about a robust economy. And that's what we're trying to encourage as investors. We want to engage with these companies, we want to engage with these governments and try and give them the right incentives such that we lend to them in a way that creates an economy that is much more robust and sustainable.
So this was Shaniel Ramjee from Pictet Asset Management. Thank you very much, Shaniel, for being with us today and sharing those interesting insights into the development of frontier markets.
Thank you very much.